Imagine a country almost destroyed by war. Its cities were devastated, its factories were destroyed, its economy was shattered, and millions of people faced an uncertain future. But just a few decades later, that same country became one of the most powerful economies in the world. Toyota, Sony, Honda, Panasonic. Japanese companies became household names across the globe. But how did a country destroyed by World War II become an economic powerhouse so quickly? The answer was not simply hard work. It was reconstruction, education, technology, industrial strategy, and a long-term vision. And this incredible story begins in 1945, when World War II ended. Japan was facing an enormous crisis. Hiroshima and Nagasaki had been devastated by atomic bombs. Tokyo and many other cities had suffered massive destruction. Industrial production had collapsed, and the country's economy was struggling to survive. Japan faced one enormous question: how could it rebuild? But this moment of destruction would eventually become the beginning of one of the greatest economic transformations in modern history. After the war, Japan went through major political and economic changes. Land reforms were introduced. The education system was strengthened, and Japan's economic institutions were gradually reorganized. Then, an unexpected opportunity appeared. In 1950, the Korean War began. The United States needed enormous amounts of supplies, and Japan became an important base for production and logistics. Japanese factories began receiving large orders. Industrial production increased, and the economy started moving forward again. This gave Japan the economic momentum it desperately needed. But Japan didn't simply want to produce more. It wanted to produce better. Japanese companies focused heavily on quality control, efficiency, reducing waste, and continuous improvement. This philosophy became closely associated with Kaizen. The idea was simple: make today's work a little better than yesterday's. This mindset became an important part of Japanese industry and helped companies continuously improve their products and production systems. Japan then focused heavily on exports: cars, cameras, watches, televisions, electronics. Japanese products began entering markets around the world. At first, many people saw Japanese products as cheap alternatives, but that perception gradually changed because Japanese products became known for being reliable, durable, and high quality. And that reputation gave Japanese companies a powerful advantage in the global market. Then came the rise of Japan's automobile industry. Toyota, Honda, Nissan. Japanese cars began appearing across the world. They were relatively affordable, fuel-efficient, and reliable. Then came the oil crisis of the 1970s. As fuel prices increased, consumers started looking for smaller, more fuel-efficient cars, and Japanese automakers were perfectly positioned to meet that demand. Their cars became increasingly popular, especially in markets like the United States. Japan had found one of its most powerful engines of economic growth. But Japan's rise wasn't limited to cars. The country also became a technological powerhouse. Sony, Panasonic, Canon, Nikon, Nintendo, one company after another, built global brands. From electronics to cameras, gaming, robotics, and advanced manufacturing, Japan became associated with quality and innovation. The words, "Made in Japan," gradually became a symbol of reliability and high quality. Another major reason behind Japan's success was its investment in human capital. Japan placed strong emphasis on education, science, technology, and engineering. This helped create a highly skilled workforce, including engineers, researchers, technicians, and factory workers. As a result, Japan didn't just produce more products, it learned how to produce better and more advanced products. By the 1980s, Japan had become one of the world's largest economies. Japanese companies expanded around the globe. Japanese technology was everywhere, and Tokyo became one of the world's most important financial centers. At one point, people even began asking, could Japan eventually overtake the United States economically? But then, Japan faced a major problem. During the late 1980s, Japanese land and stock prices rose to extraordinary levels. A massive asset bubble had formed, but bubbles eventually burst. And in the early 1990s, Japan's bubble collapsed. Asset prices fell, banks struggled, investment slowed, and economic growth remained weak for years. This period became known as Japan's lost decades. But Japan's story did not end there. Even today, Japan remains one of the world's largest economies. Toyota, Sony, Honda, Nintendo, and countless other Japanese companies continue to influence global markets. So, how did Japan rise from the ruins to become an economic powerhouse? The answer was education, technology, quality, efficiency, exports, and most importantly, long-term planning. Japan proved something important. A country can lose its cities, its industries, and even its economy, but that doesn't mean it has lost its future. With investment in people, knowledge, technology, and industry, a nation can rebuild itself from almost nothing. In 1945, Japan was standing in the ruins of war. Just a few decades later, it had become one of the world's greatest economic powers. This is the story of Japan's economic miracle.